Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the miggity Mac Daddy, the G Daddy, Gino Burrow. Gino, how's it going?
The J Daddy. That's what I start calling you, bro. I'm doing good.
Everyone's the old school, brother, man. Got to make it happen. You know what I'm saying?
Everyone's referring to me as G Daddy, and I show it to my kids. So I'm really cool with my kids. I show my kids texts and all this stuff and emails, and they're like, "Dad, they think you're cool." I'm like, "Yeah, some people think I'm cool."
Dude, I'm telling you, I want a shirt, black shirt, big G dash Dad. I want to start representing you. Wear it every podcast, or else I'm coming for you. All right?
Dude, make it. I'll wear it.
Oh, now I got to do the work. All right. Let's give a quick shout out to our sponsor who asks the question: do you need a property management software solution for your rental portfolio? Properties Czar is a web-based property management software designed for portfolios of all sizes. Property Czar includes features of the leading software vendors at a price that is affordable for even the smaller portfolios. Whether you manage 10 or 10,000 units, Property Czar's based entry point is affordable for all. Property Czar comes with a complete accounting system in addition to calculating your cap rate, cash-on-cash returns. Property Czar allows you to track assets, screen tenants, accept online payments, conduct on-site inspections, online applications, schedule appointments. It does everything, Gino. I mean, this is non-stop here. Email, text, auto-calculate late fees, automatic reminders, on-site inspections, and post your vacancies to major rental sites. Tenants can submit work orders along with pictures via the mobile app. Schedule appointments and set unlimited reminders to all attendees. You can also remind it to change HVAC filters. Hey, it's important, right? You don't want those things going down. Property Czar is one of the most user-friendly applications on the market, but just don't take our word for it. Try it for free. So, what are you going to do? Find out why Property Czar is quickly becoming the property management solution for portfolios of all sizes. And right now, this is right now, Gino, our listeners can start for free. Start a free trial. That's right. No credit card required. Just go to propertyczar.com/Gino. They don't love Jake. They just love Gino. We're just going to put it that way.
Well, you know what, Property Czar? I've got to give you a heads up. You are doing something amazing. You've actually had Jake read like a page worth of stuff. I haven't been able to have him do that in the last 5 years.
I don't know, man. That was kind of tough. But we got it,
bro.
Listen, we'll work on that one. So listen, today's guest is Matt Faircloth. Matt has been an active real estate investor since 2002 and founded the DeRosa Group in 2006. Matt's vision is to transform lives through real estate while maximizing investor returns and providing high-quality spaces for sale and lease. So without further ado, Matt, welcome to the show.
What's going on, Jake and Gino? Thank you so much for having me here.
Whew, man, that was quite the intro, man. I gotta start speed reading.
You're not bad. I know. That's not bad. I gotta check out that Property Czar thing sounds awesome. By the way, I was listening in on your intro of that, and not only was your reading spot on, very good. I'm gonna have you read.
I don't know about that, but we'll see.
I'm gonna hire you to read to my kids.
That's where I get my practice. We got this little duck book and whatever. So hey, let's get in the meat and potatoes here. Tell us about your background and how you got started in real estate.
Sure. So my first deal was in 2002. I was working I was a sales rep for an equipment company, had a big sale. I sold like $500,000 worth of equipment to Minute Maid orange juice and made this really big commission check and was like, I was young and stupid and didn't know what to do with it. The commission check was not, it was like to a mid 20 something, it was a lot of money. It was 10 grand. And so I was like, what do I do with this? And so let me just put this in my savings account. So I let it sit there for like 8 months because it was enough money. It was to scare me. It's like, okay, let me not go blow this and go do something stupid. So I just sat at my savings account and forgot about it. Fast forward to, I started dating a girl who introduced me to the Robert Kiyosaki's books.
There goes the money. No.
What's that?
You said you started dating a girl, so I said, there goes the money.
I know, right. Gone. I had another girlfriend before her that I was like, nah, maybe I'll buy her an engagement ring. I'm sure glad I didn't do that. But I just let it sit in a savings account. And my new girlfriend and future wife actually introduced me to Robert Kiyosaki's technology with his books and started playing Rich Dad Poor Dad and stuff like that. And I'm like, man, this is amazing. Like, I really kind of didn't like the job I was at. I saw that really didn't have much upward mobility and everything. So I took my 10 grand and I bought a single family home, 3-bedroom, 1.5 bath on an FHA mortgage. It was $150K was my buy price. I laid like $5 grand down, seller assist, limped to closing, got the whole thing, but got it done. My monthly payment was $940 a month. I convinced 2 of my buddies to move in with me, and each guy paid me $500 a month. So I was making $60 a month and living there for free at 25, 26 years old.
House hacking at an early age.
Yeah. And I mean, it was one of those things where I was living there. I mean, I had a bunch of credit card debt and had student loans and everything like that. I paid off like 30, 40 grand in credit card debt and student loans in 2 years. Which again, for an early 20-something or mid 20-something, that was impressive to be able to do. The only way I was able to do that was through real estate, was because the real estate supplemented my living expenses, which I recommend to any younger unmarried person that wants to get married in this business. House hack it, man. That's the first thing you got to do, because then you can leverage out your living expenses and try on landlording, kind of see if you like it a little bit. And then grow from there. You don't need to go buy an 100-unit apartment building as your very first deal. You can house hack it at first and then build your way up from there. So fast forward to my wife and I got married. I quit my day job soon after we got married because we figured out how to live off of just her income, so I could spin off and start our company. And that. So living below our means was the next little tip I'd give other people, or trick that we did to get ourselves going. And then just built it up from there. Bought a few more rentals. The market was booming. It was 2005. So between 2008, the market was taking off. It made everybody look really smart. So we did a lot. We did flips, made money. Bought some other rentals, made money with those too. And then the bottom fell out, and that's another story. And we rode that out, and we lived to tell about it.
So I got a question for you. You said live below your means. What does that mean to you? Because, I mean, to me, living below my means is, when you got 6 kids, it's difficult to do. I mean, what are your means? So when you first start out, just tell people, I mean, work it through. How did you work your budget?
Sure. Much easier for us at the time. And I would say, for anybody, I have kids now. And so I only have 2 kids. It's 6. I can't imagine. But the living below our means at the time just meant we didn't buy the absolute biggest, nicest house we could afford. We didn't buy the best, nicest cars that we could afford. We figured out how to live at probably about half of what our income would have been on 2 salaries. So we figured out how to live on just her income, okay. To where it freed me up to not have to work, but not have to generate money either. And because of that, because I didn't have to chase dollars right when I first got started, I was able to make more strategic moves to build the bones of a much larger business, and didn't have to make decisions based on making a check that month. I could make decisions based on building a long-term business versus, chasing income to pay my bills.
So what was the first purchase you made when you broke out living below your means? Do you remember that?
Yeah. We bought a duplex in Philadelphia, which we bought it for a great deal. We had a brief story. I forget where I had heard this. I might have one of those run to the back of the room gurus that we had gone to gave us this tip, which was a great idea.
What's run to the back of the room guru?
What do you mean? Which one, or what is it?
No, what's a run to the back of the room guru?
Oh, when you go to these real estate club meetings, everybody has been, if you've been to a real estate club in your local area, and you've gone to a few of them, then a lot of times they'll bring in these national speakers. And I call them run to the back of the room gurus, because they're like this, they are self-proclaimed, I know everything there is to know about X, wholesaling, flipping houses, landlording, buying apartment buildings, insert whatever subject you want. They are perceived to be the end all be all, knowledge about it. And run to the back of the room, because that's the encouragement they give you, is like, we only have 3 packages left. Run back there and buy them.
Go now.
Go! $4,000 plunked out.
Do it now.
Right. You know, I've seen people that are unemployed plunk down $10,000 on the credit card to go and buy those programs. And it's like, you know, you could spend, first of all, you probably could have bought a deal for that. You know, I mean, I paid less than that for my first deal. But we went to, my wife and I went to one that was like maybe 5 to 7. I won't say the guy's name, but it was like 5 to 800 or something like that. We went to his landlording program, and most of it was pretty good. There was a lot of hokey stuff. And of course, once you get there, he wanted you to buy the $5,000. And if you want to do that, then you might as well pay him, you know, above that to, you know, do a coaching program and everything like that. It's always a funnel, right? But we got a few good tips, and it was worth the money we paid to get there. And the good tip that we got was, when you're looking for smaller deals, this works. Call for rent ads. And so, like, this was back in the day when people were posting for rents in the classified ads in the newspaper. So we went out and bought the local paper and opened it up and started at the top and started calling the for rent ads and say, I see you have it for rent. Do you have any interest in selling? And we got laughed at, hung up on. People quoted us ridiculous prices for their properties. And then, like, the 30th call we did, the people were like, you know, we actually would be interested in selling. And it was these two, it was a lawyer and a CPA, both of which had full-time practices that were requiring like 60, 70 hours of their time a piece.
Best people to buy from, man.
Yeah. Working their ass off. No, these are people that should be investing with guys like us, that shouldn't be buying their own deals. You want to get into real estate, people need to hear, because you don't have to be the operator to make money in real estate. You can make money through investing in a syndication, through doing a private loan, whatever. That's what those guys should have been doing. But they went and put together, you know, came up with like 60 grand between the two of them and bought a duplex in Philadelphia and promptly ran it into the ground. You know, I mean, the tenant stops paying their rent. What do you do? Well, this guy's got to take a day off of work to take her to court because they wanted to manage it themselves. You know, didn't really know much about redoing apartments, but they tried to redo it themselves. So they slapjacked it and did an awful job putting the place together and stuff. So we ended up buying it from them for just a little bit more than what they paid for it. And promptly got both tenants out, redid the units, did the right thing. And that was our first deal.
Wow. So,
and by the way, this is back in the day that we did like high leverage loan. I think it was like 95% loan to value for an investment grade, non-owner occupied rental. This was, you know, during the no-doc days. So
these lawyer and doctor where is the education, the back of the room gurus. That's what they went to. They went to a back of the room guru session.
Probably.
And the problem with those guys is they don't like to see 8%. They think they can do it themselves and make 50, 60% returns where they think so. And they should just be saying to themselves, hey, let me have somebody run it properly, get the tax benefits, get the cash flow, and not have to worry about it, right?
People don't value time. They really don't. I think that if the really wealthy folks that I know put a lot of value on time, and they look at it and say, yeah, I could be making 25% on my money if I took the whole enchilada down, but I'm also going to have to drop what I'm doing and leave my dental practice to go and deal with tenants, or to go and find a building, or to go and do whatever. But the smart ones that I know they see the value of time, and they're willing to, you know, allow folks putting deals together to take a slice of equity in exchange and create a win-win situation.
You bought this duplex. Would you consider that your first multifamily, or what was your first multifamily property? 5 units or more? Because duplexes, they're still residential.
No, I wouldn't count that.
Yeah, they're still a little comfortable, and people still think them as residential. What was your first commercial deal?
So we sold that duplex right after Liz and I got married. About 6 months after we got married, we sold that duplex because the market was just continuing to boom, and we bought it for, I think we bought it for 140, 150K, and we sold it for 230 within like 2 years of ownership. And this is just the way things were back then. And we did a 1031 exchange, which is where you sell a piece of investment grade real estate. I know you guys know what it is, but I'm telling for your audience that might not know. You sell a piece of investment grade real estate, take the profit, roll it into the next deal, and you don't have to pay tax on it. And you have to pay capital gains tax. You can just roll your gain and parlay it into the next one. So we did that and bought 2 4 families, which was like an 8 family, like a 2 4 units sitting next to each other. That was our real first multifamily deal.
What'd you pay for it?
Too much. We paid like, yeah. It can't, now, mind you, this is like mid 2006, and I mean, it was just, it was getting hot.
Here's the point, though, right? It's okay. You got to you don't always make the best deal on your first few, but you're still in the game. You're still doing it. So.
Oh, we did really well on that deal long term. Like, it was 2 4-unit buildings. We ended up buying 3 more on the block and consolidated it as a 20-unit apartment complex, quote unquote, air quote. Not really, because they're 5 separate tax parcels, but we sold them for multiples of what we bought them for, collectively. But anyway, we paid $319 per building, which I'm not the best with math, which is somewhere in the neighborhood of like 80
or something like that.
Yeah. So, and the rents were somewhere it was like the 1% rule. If you guys, use that as an analogy, it's like the rents were somewhere around 800. And the buildings we paid around that for, but we, again, bought them is low. It was no money down. It was 1031 exchange, profits rolled in. And then again, back when mortgages were nuts, we laid 5% down per building. We had a first mortgage and a second mortgage, and the first was on something called a negative amortization. You guys ever hear of that?
I don't know about negative amortizations.
It's so glad they don't. It's like a weapon of mass destruction. It's so glad they don't do it. It's so great they don't do that anymore. But what it is it's a mortgage product that banks on the market going up every year. They could probably reintroduce it and start selling it these days. I'm glad they don't, because it'll murder you. But what it is let's say that your interest is per month is $1,000 a month is what you would owe if you calculate the interest rate, just the interest on the loan that you have, right? Well, on a neg am, you only pay $750, and they take the $250 that you would have owed towards interest and they roll it into the principal. So the principal actually goes up every month. Instead of you amortizing it and going it down, it goes the other way. And if the market's going up, then the market appreciation.
Just saying, well, we're going to appreciate, let's bake it in. And yeah.
Right.
Wow.
Yeah. You could use all kinds of hokey terms and explain it any way you want and everything like that. But really what you're doing is you're betting.
Why refi? Let's just prepay that shit.
What's that? What we did. We ended up refining it after a couple of years. It was not. Yeah, we were young and stupid and everything like that. But we made money on the buildings on cash flow and all that, which was fine. But not realizing we were, kind of waiting to pay the piper. And then when the market did crash, we ended up having to leverage other assets into a refinance. You couldn't refinance these properties by themselves because the debt on them had gone up, and then the market crashed down. And that's why you should again work right.
Really, this is exactly what it's doing, right? So the market goes down, that you kept adding debt. Oh, that's yeah.
Let me jump in. Let me talk real quick about the 1031s, because everyone loves 1031s. They're like the end all be all, and they have a lot of benefits to them. But one of the things that I see investors doing in this market is they're happy not to pay taxes. But then on the back end, they're rushing to find their assets, 3 assets, to say, I've got to find 3 assets within 90 days and close within 6 months. So their negotiation is just crap, because when you have a deadline, your negotiation sucks. They end up paying more, like you did on this asset, because they're happy not to pay taxes. So they're overpaying a lot of times on the buy side, especially in this kind of deal, in this kind of market, because it's hard to find a deal. So it's really time specific. And I see a lot of people screwing them up. They don't get intermediaries. And intermediaries that some of these guys they do have still screw them up. So I
got a story for you, buddy.
Yeah, well, 10 more seconds. I want to hear your story, because we did one 20 years ago. We got raked over the coals by the attorneys. They screwed it up. We ended up having to pay, and it's not, you're deferring the taxes. Because one day, once that 1031 ends and you can't roll into another asset, that's going to get paid off. Now, if you have, if you have great attorneys and you're doing all credit shelters and all of that, you can probably get away with it down the road. You can inherit or will it out. I'm not talking about that, but just be careful when you do one. And when you're trying to do one, when you're buying a property or selling a property, don't let them know, because if they know 1031 is involved, they know there's a little bit of motivation. So be careful
about the short and curlies. I mean, if they find out that you're under that time crunch, because there is no way to get out from under that time crunch.
That's right. There isn't.
So I'll give a recommendation for your listeners, and then I'll tell you an awful story where I got my teeth kicked in recently. Like I should be missing teeth right now, because it just happened a couple months ago. But 1031s, I find that the times that I've done them, the way that I've seen them the most successful is when you kind of sandbag, when you've got your next deal lined up as you begin to sell your first asset, right? You got to find somebody who's willing to let you slow play it. You don't tell them you're doing a 1031, as you said, because then they kind of feel like they got you. And you don't tell the buyer of your other property that you're doing a 1031 until the last second, because then they feel like they got you. But what I find works is if you shop first for your new asset and then look to sell the one that you got. And then you kind of let everybody be loose on timeline, and then you can kind of bam, sell one, buy the other one, right? So that's what we did. We sold an 18-unit apartment building in Philadelphia and made a nice little chunk of profit. I found a 1031 intermediary online, called the company, interviewed them, read up on their website. Everything looks good. Watched some interviews with the guy, with the media and everything like that. Everything all showed up kosher, and everything. So we closed. Turns out the guy was running a Ponzi scheme, right? So we sent this guy our money. He's down by you, by the way, Gino. So I might send you to go collect, because he's down in Florida. He's down in
go
Florida.
Bust some ass, G-Dad. Get that shirt out that we talked about.
Right? No. He's a Northeast guy, so I know he knows how to collect and everything like that. So I might turn you loose on him. Anyway, long story short, he was running a Ponzi scheme, and people were doing 1031s, sending him their money, and he would return it, but only because he was giving them back somebody else's money from another thing or whatever. And he was raking off what he could. And the guy was buying himself real estate. He was buying assets for himself, and, doing all kinds of stuff with the money he shouldn't have been. Probably started out borrowing against the money, in the account, which he shouldn't be doing, or borrowing it and then returning it and everything. But ended up getting behind himself. And now we are in a class action suit against him to collect our money.
Also, so your money's still with the intermediary right now. All your profits and everything is still with the intermediary?
$700,000.
Well, it's not typical. Your results are not typical. This doesn't happen.
Yeah.
Just a disclaimer, but
right.
And wow, yeah.
So here's what we did, and I don't want to discount that amount of money or whatnot by laughing about it, but it's therapeutic for me. So, or whatnot. So, but don't disclose don't confuse the demeanor that I have around it to taking it lightly, because this was a tough situation for us. And my wife and I shed a few tears around this thing, man, because it just kicked us hard. But what we ended up doing, and this is one of the benefits of having another deal lined up, we had a 198-unit apartment building lined up to buy with that money. And that money was going to go into this deal as a tenant in common arrangement. Okay. So what tenant in common means that 1031 company owns a little slice of the dirt, and you form another company that owns the other slice of the dirt. And that's how you can 1031 to invest in larger deals, even if the money from the 1031 isn't enough to take the big deal down. We needed $3.2 million in equity to buy this 198-unit building in North Carolina that we did. The $700,000 from the deal in Philly was going to be a chunk of that, right? So, number one, we ended up hiring a legal team, and we're going after this guy with both guns. And I think that because the guy was stupid, but because he invested the money in other assets, I am certain we'll be able to recover, if not most of the money, because he went out and bought a bunch of stuff free and clear, bought his house free and clear with 1031 money. Guy bought himself $1 million house free and clear. Okay, we'll take that. Bought himself a bunch of townhouses, bought himself a self-storage center, all that stuff bought with this 1031 money. Now, we're not the only ones in line. There's other people and all that, some that are a good bit larger than me and all that. And I talked to them too as well. So they're going after him, and I've got to just let lawyers do what they do to go and recover that. On the apartment building in Philly, in North Carolina, what I ended up doing was that $700,000 would have purchased around 20% of this project, right? Again, I'm going to start speaking syndicator talk and all that. And I know you guys know what I'm talking about, but for your audience, I'll do my best to keep it simple. Organizing the deal got me something called a carve out, which is 30% of the project, right? For me putting it together, and that's my share of the profit that I earn through putting this deal together. Instead of me keeping that for myself, I ended up having to do the right thing by my investors, and I gave them the majority of my carve out. So I've got like a toehold in that deal, just enough to keep me. I'm fine.
Was your carve out including the $700,000 you were putting in?
No, that $700,000
was going on top of the carve out.
What's that?
So you had 30% carve out for putting the deal together, you're saying.
That's right.
But then you said you were putting $700,000 in. So you were getting 50% of the equity. Is that what you're saying?
So let me back up.
Yeah.
We needed to raise $3.2 million for the deal.
Yeah.
That was going to be 70% of the ownership, that $3.2 million. Of that 3.2, this property in Philly was going to contribute 700,000. So which means I needed to go out and raise another 2.5,
Mm-hmm.
Yep.
right? Which I did. And then the 700,000 was going to fill in the rest of the gap. That 700,000 and the other 2.5 were going to take the 70%. And me and my partners were going to take the 30%. You got it?
Mm-hmm.
Cool. All right. And then what we ended up doing was, because this fell through, I ended up having to go out and raise another $700,000 because we didn't have the money anymore. And then because I had to cover my investors somehow. Now I could have called my investors and said, hey guys, we got robbed and we're going to go and chase this guy down.
Makes you look like shit though.
Correct. You think these guys would invest with me again?
Yeah.
And it's just not, again, people put their money with us. And I'm not 100% sure how you guys do your deals, but if you guys syndicate, or folks that you're listening do syndicate your deals, I'll just ask, do you guys syndicate your stuff with investors?
We have not.
We just bought all our stuff.
We're
Cool.
we're at the point where we're going to start syndicating now. We're going to start
Cool.
syndicating deals.
Maybe.
now.
So anyone that's working with either a syndicator or with folks that invest with you, or a private lender or whatever, right? You're a custodian of other people's money. They're trusting you. That CPA or lawyer or doctor or whatever is putting their financial future with you. And so I felt like it was the only right thing to do, to find a way to cover these people, and not just send them an IOU, just to give them a pound of my flesh, if you will, of my carve out of this deal. So now my investors own that are in that building in Philadelphia, own a big chunk of my side of this property in Philly, or in North Carolina, excuse me.
All right, we got to raise his spirits back up. He's like getting low on us, Gino.
I know.
No, but let me just ask Jake, let me ask one more question. That's
I lived another day though. What's that?
No, that's 700,000. Normally, traditionally, syndicators, wouldn't they take a percentage of that LP, limited partnership, and say, hey, listen, that 700,000 that I raised is whatever, let's say 20% of the limited partnership. That's what Jake was saying. He's saying that you're getting 30% of what we would call the GP, the general partnership. And then out of that 70% of the LP, the limited partnership, you and your partner would own 20% of that in addition. That's not how you guys structured it, correct?
Are you talking about the deal in Philly?
Yeah, no, the deal right now that you raised, the deal
North
right now.
Carolina, the department deal.
Yeah. So I'm not sure if I 100% get it, but there's the general partner side. That's the compensation for putting the deal together.
Mm-hmm.
That side, the way that we structured it, didn't put any money in as a general partner,
Mm-hmm.
right? The money that we were putting in was going in on the limited partner side. So there's the GP and the LP when you structure these deals.
Mm-hmm.
The GP is like the operator, also the personal guarantor of the debt, which we personally guaranteed $6 million worth of debt for this property, right? The general partner is just like the obligator for everything, for running the project, and is kind of the point company that runs the asset. Then there's the limited partners that come in and are pretty much silent partners on the deal. All the money that came in was going in on the limited partners.
But what I'm saying is you're pretty generous, actually, because most syndicators don't put any money into their deals and they still carve out 30%. There's a lot of guys out there that ain't going to put 700,000 into this deal. They maybe they'll put 100 or 200,000. Yeah. Still retain 30% of the GP.
We don't always put money into our deals. We don't have. I mean, it's just that we did a 49 unit last year in Pennsylvania, and we didn't put any money into that one. But I mean, I will, I can. When investors ask me, a lot of people ask me that, like, "Oh, you're gonna put any money?" Like, in people that invest in the deal say, "Oh, you're gonna put any money in, and you got to have skin in." And I'll say, "Yeah, well, I will if we have to." But I'm going to make this deal available to people that want to make passive money through real estate. Then if I find there's a gap, I will gladly fund that just to get us to closing. And I believe in what I do. And so I do fund deals. But at the end of the day, I have to be cautious, how much of my money I put into deals, because I've also got flips going on. I've got this, I've got that. My money's in a lot of things already in that, but I want to keep putting things together to benefit my investors. So, and also you can't discount the fact that we're personally guaranteeing the debt. Yep. And the legwork that we do to find the deal and everything like that. So
that's why I was asking you. No, that's why I was asking you, because $700,000 is a lot of money to put into a deal and not have any LP and just say, here, this is all for you guys. So
right,
generous on
right.
You.
Well, it just so happens that we were doing it that way, and it's lucky that we were, because then I've got something to give to those investors that had the money taken from them. Now I've got a piece of equity that's worth actually quite a bit more than 700,000 that I can give them a chunk of, just so they're covered. And as the money comes back through the litigation, I can start buying them back out, and buy myself more of my 30% side that I wanted to have to begin with.
Oh, man, that sucks so bad. I feel bad for you, man. That is.
Well, it's good. It's good that people hear this, because everyone thinks it's a la land and it's syndicate. It's easy to raise money and this and that. There's a lot of processes to this. What did you like?
I think it's time to get some bats out and go hunting. Go find this dude.
Please, I tell you. Yeah. Well, there's
So Matt,
there's other people that after him too.
What did you like about the deal? I mean, what was the redeeming qualities about this deal you found in North Carolina?
Well, we're a bread and butter investment company. We get into workforce housing stuff. I take workforce housing product and spruce it up and make it what I call workforce luxury. And so we'll buy just a dilapidated product that's where the people that earn around the median income in the area can live in. And so it's just a quality, we try and make it a quality asset for people that might be, the person waiting tables, the person just getting started, or whatnot, just in life in general. It's not luxury A-class housing. I typically buy it at a C-.
Blue collar retail workers. Got it.
That's it. And I find it to be somewhat recession proof, and anyway, so that's what I like about it, is because it's that kind of product, but it's also, we bought it for like $30,000 a door, which is really, really good for that market, because the rents are somewhere between $500 to $600 a door. And I go back to the deal that I bought in New Jersey, where we paid $80,000 a door for it, and the rents were at $800, and I thought that was a good deal, right? Where this is more like the 2% rule, where like if you look at the asset, what you pay for a door, 2% of that dollars per unit is what you get back per month in rent.
So what cap rates are you looking at to buy? I'm sorry.
We bought that at around a 7.5 cap, but it needs a lot of value add, so we're going to. It's at the bottom of the market that it's in. Even if you look around it, all the other workforce housing properties are renting for somewhere around like $600 to $700 a unit. Our property right now is renting for like $500 to $550 a unit. So there's room to grow. But it's got, stained carpets and cabinets from 1974. And just everything's just slightly,
carpet cleaning's amazing, man. You got that. All right.
Right. Stanley Steamer. You bring those guys in, $100 done. Right. No, we don't do carpet in any of our units. I don't know. Do you guys use carpet anymore, or do you go all laminate?
So on the second floors, we've had really big issues with sound coming through without the carpet. So, we'll do in like the living room and the bedroom, or pretty much living room, bedroom, second floor, we'll still have the carpet and the pad there so that they don't hear everything that's coming up through. But we'll go vinyl on the all the downstairs though. Yeah,
I've had a lot.
How do you get around that?
Well, I've been a landlord for 12 years, so I get a lot of those people upstairs are making too much noise. That's probably the biggest, aside from like heat issues, the biggest tenant complaint that we get for our portfolio we have here in New Jersey is about neighbors.
But are you doing vinyl on the second floors as well?
So there are a couple of different layouts, right? There is a townhouse model that is a 2-bedroom, 2-bath townhome, which, oh, by the way, the prior owner was just marketing that as a 2-bedroom. He also has 2-bedroom flats. He was charging the same price, even though the townhouse was 2,200 square foot bigger.
And more desirable in most cases, probably. Right?
Yeah, and it's a townhouse, man. You got 2 bathrooms. You got you got a big common area and everything like that. No, brilliant. Charge the same price for it. Who cares? It's just all on bedrooms, right? So
mom and pops, man. That's what he's been talking about the whole time, Gino. Mom and pops.
Yeah. Well, this guy, we bought it And we're going to do the laminate vinyl plank. That's what it's called, LVP. On the first
Well,
floor.
townhouse, you're going to be fine because it's the same people living there, right? So they're not going to bitch at each other.
We're also, because of the structure of the building, which gets back to your question, it depends on what's in between the floor plates. So if it is concrete in between the floors, then
spandex or whatever,
yeah, we have it's poured in place. It's they do a little deck and they pour a concrete floor on the second floor. If that's what it is, then you should be okay on sound mitigation downstairs. If the whole building is 100% stick frame and there's not much masonry in the building, then you will have sound down. Now, there's ways around it. You can stuff sound attenuating insulation in the ceiling of the first floor unit, or do blown-in insulation. That is expensive doing it that way.
Yeah.
So if we find if you can hear a lot of what's going on upstairs, save yourself those tenant phone calls and do carpet on the second floor like you guys are doing. But it depends on what that second floor plate's made out of.
A lot of our garden style stuff, we've had to just do the carpet because we don't want to go that, one way or another, you're going to pay because, like you said, if you have to insulate it, do that stuff, and then, hopefully it works, et cetera, or you just can hope to get 7 years out of the carpet. So,
yeah. I mean, it's, the carpet's
I hate it, man. It's disgusting, and I absolutely hate it.
It really is. I mean, it just makes you want to pull it out of everything you own, because if you allow pets, forget it. I mean, they're gonna pee on it. And pets just come. I love pets, but pets smell sometimes when you don't bathe them and don't clean them and stuff like that. And that smell just works its way right into the carpets. Sometimes you tell tenants they can't smoke. They smoke anyway in the unit. That gets into the carpet and everything. It's just carpets just soak up stains and smells, and
it's gross, man. I hate it.
I'm with you. They are. Disgusting. Yeah. So we try to get it out where we can out of our units, and that laminate vinyl plank stuff we like because you can replace replaceable segments of it and everything. So in this complex, we're going to do it. But it's 198 units that we're going to turn as we go. So as tenants move out, we're going to turn them and upgrade them. So if we find we're getting a lot of noise complaints in the ones that we have turned already, we might shift to something else. You asked what else you can do. There's a padding. There's like a couple of millimeter thick padding you can get in between the floor. And now this isn't for laminate vinyl tile. You can get the planks it's not glued down, but the floating floor stuff, you know what I'm talking about?
Mm-hmm.
It's not glued to the floor. It floats, and you can get a padding to sit in between that. And that soaks a lot of the noise up too.
Wow. So we talked about money-wise, how you got the money. How did you find the deal?
It was on LoopNet.
Was it really?
I'd love to tell you some brilliant story that I set on a mailing campaign and everything like that, and that we shook the tree and found the guy. Yeah, it was on LoopNet. Another investor, also from New Jersey, put it under contract and then tried to retrade, which means where you go and try and get the owner to drop the price based on things you find during the due diligence inspection and everything. So he tried to retrade. It was a $6 million sale. He tried to retrade him at $1.5 million to get them to drop their price by $1.5 million based on what he found during the due diligence.
That's a lot. That's a big number, huh?
People don't get it, man. They don't see the forest beyond the trees. They don't realize, first of all, you're probably going to lose the deal. You want to try and twist the guy's arm and all that. Yeah,
bad faith negotiations, man.
Yeah. I mean, and if he had tried to retrade him at a couple at 50,000 or something like that, the guy probably would have done it. But we came in behind. I've been a second buyer on like the last 3 deals that we've done. And just because the first buyer typically overbids it and tries to get squirrely and then falls on their face or can't get financing or whatever. So we've come in behind them and have been second buyer and closed it. So on this one, we came in and he discounted his price because he knew he had a few things wrong with the place, not by 1.5 million, but we saw what was going to happen once I didn't get to finish this part. We're going to invest around $6,000 per unit into the apartment complex. In doing that, that's going to get me $150 per unit more on average in rent, right? Across the whole complex. So $150 times 198 units times 12 months a year is $350,000 in additional income that we're going to make on the building, right? We're going to take that $350,000 and we're going to of additional.
So it's like a 4-year payback, basically, right?
We're going to refinance the building.
Okay. Gotcha.
And we're going to refinance the building based on that new income that we're going to make, because the 350 is on top of what we're making now. Mm-hmm. So we're going to take that and refinance the property to pull some of our investors' money back out. recapitalize the asset at higher debt, yes, but better cash flow.
It's so funny because our entire 2016 is what you just described. We were constantly in second place, and like we got one deal, and it was we were in second place, but it was because of a retrader, about $1 million, same kind of deal. And a lot of people are like, they're always looking for that like secret thing. What does it take to get a deal? And you said you just got one on LoopNet. It's broker relationships most of the time too. Yeah. Have the relationship with the brokers. They'll bring you deals, and it's not some rocket science, guys.
I glazed over it. You're right. But I mean, the broker that I used on the deal, I've done 3 transactions with.
Yeah.
In that.
So you have a proven track record with him. He knows your closer. So yeah.
So he came in and because I mean, there are so many people out there that are running around talking about how they buy real estate and talk about how they can buy apartment buildings and stuff like that, that are throwing out offers and LOIs that the run to the back of the room guru thing that they went to last weekend gave to them. Hey, here's your LOI to use, and everything like that. So they're running around shooting out the lights, but eventually, the wheels will come off and that. But
Matt, did you actually call a broker, or did you call a listing broker directly? How did you have your own broker?
So I saw the company that had it listed, and I have a relationship with that company already. Okay. So I called my in-house guy with that company. And it doesn't matter what company it was, but there's a lot of big national brands like CB Richard Ellis, Marcus and Millichap. I don't know who you guys like to use, but there's a lot of big outfits out there that have national brands. And so I do a lot of work with the specific company. And so I called my local guy in Philadelphia and said, hey, I got a deal in North Carolina listed by your firm. I need you to call the listing agent down there and tell him that we
tell him I'm the man. Tell him I'm the man, man.
You got Matt Faircloth coming, right? Yeah. But he did that. He called him and talked us up and said, hey, these guys have closed 2 deals with us already. And they're not going to come and they're not going to come and shake your guy up and retrade him and waste his time and all that. So
did you end up having to compensate the broker, or was it all a seller? Because a lot of times in this market where you deal with Cushman, if you're not dealing directly with the listing agent, they're going to come in and say, hey, I want to get some. They
worked it out. He had to, they broke his balls over it a lot, but he, those guys, it's like watching wolves fight over a kill.
I got to get paid for talking to this guy one time, right? Yeah.
It's
right.
Yeah.
Right. We've had that too. Like, I want, compensating factors or introduction or whatever. And it's like throwing meat into a lion's den, man. They all just,
it's such a good analogy.
It's insane. But they did that. The meat, I was the meat, and that flew into the lion's den and all that. And they did their little scrapping behind the scenes. And my broker called me up a day later and said they had worked it out. I'm not sure how they worked it out, but they did on how he was going to get compensated. So
blood was everywhere, but they got it done.
Right.
That's my question. Would it have been easier or smarter or better for you to call the listing agent directly instead of having your broker involved? Now looking back at it, what would have been better? Just doing what you did, or just say, hey, let me call the listing agent?
If I didn't have an in-house relationship, then yes, I would have done that. I've found it's tough working with people that rep both sides, and that goes all the way up. That transitions from single family homes to like on fix and flips on the small stuff, all the way up to the big stuff. Working with an agent, I think dual agency should be illegal personally, because you cannot represent both interests. You can't, and you can't have one side tell you something. I know like the real estate, and again, I've had my real estate license before. They talk to you about real estate ethics and everything like that. They say you're not supposed to say things. The realtor always quote unquote slips and tells you some bit of information that's going to influence the deal one way or the other and everything. So anyway, I probably would not have called the local guy. I probably would have called another guy in his office and found somebody to represent me and have the two of them work it out.
Gotcha.
I personally love it because I feel just from, the more people you get involved, the more your message gets twisted and getting more of these guys. I'd rather just sit there and talk. If you're selling something, I'd rather just sit and talk with you.
That's a good point.
Shit I can clear out of the way. I want to get as close to the guy that's selling it as possible. And I don't even want one of these guys representing me because I think they're going to f up, really.
They will.
So get them out of the way.
They almost did. They almost wrapped us around a tree a few times.
That's what I'm saying. Get as close to the sellers you can. And if I'm dealing with one guy directly, I take that every day of the week. If I get a plug from like your boy in Philly or whatever that said, hey, this is North Carolina guy, hey, this guy's the man, give me the plug, but then get out of the way.
Yeah.
That's my personal take.
Right. because as I look back on it, the frustrations we had was playing telephone, was me telling my guy one thing
Get
and
out of the way.
having to tell the other guy the other thing, and then getting back to the owner. And it's you're right. There became a lot of hands in the pie in that. So that's probably as a benefit from working.
They twist
directly.
it, and they don't even do it intentionally. They don't even know they're doing it. They can't help themselves.
Yeah.
I love you, brokers. I love you, brokers, but I just want to deal with one of you. That's it.
Yeah. Well, I try
and
get the owner. I try and get in touch with the owner directly as soon as possible. Like we took the owner for this deal. We took out for lunch, which turned into beers, and it was like 4 hours. We sat there with this guy. I let him tell stories about hunting and about the deal and about growing up in the town and about this and that. 3.5 hours. This guy told stories. The last like 20 minutes, we closed the deal. And during that time, I was able to get his phone number, and so. I was able to work out a lot of the finer points by just not even the finer points, a lot of the bigger moving items that would have gotten lost in that telephone, in like me telling my broker, him telling the other guy and all that. I was able to just call the owner direct on stuff.
It sounds like your first date. You went back to 15 years old and you got the phone number. It was 4 hours.
I got her digits, man. Right? Yeah. How about them apples, right? Right. So I find that things move quicker if you can just take it people to people, and that I'm sure you guys do that too, right? You try and get the owner's information so you can reach out to them direct.
We've spoke to owners before, but it's just, we haven't scaled out anything to basically do direct mailers or call direct or anything like that. But we've gotten recommendations to, hey, this is the owner. We've done a few deals like that, but it's basically been through relationships. And so, if we get that, great. But a lot of times it's a single broker relationship.
I try and get them even when I'm talking to the agent. Like I'll intentionally. It was one deal. We were meeting with a guy in his office, and he was the owner. I was with my broker. We left. I intentionally left something in the guy's office, and so I had a chance to go back and get in front of the owner one-on-one. Right. And so I did that, and I went back and I was like, oh, hey man, by the way, listen, just in case I need something, let me grab your card. And so, cause brokers get funny about, it's their relationship or whatever. And I'm not trying to cut the guy out. I'm trying to make sure this closing happens.
Yep.
And I got that you're going to get, you want to get paid, Mr. Agent, and all that. But you got to let us as the owners talk owner talk. And sometimes it's not always, the brokers aren't able to talk owner talk like we are. So I try and find a way, to get in front of to get the owner's information. If I need to call him, I can.
Wow. Before we go to short answers, just give everyone out there your best real estate advice or tip to the listeners.
So I found that, again, this 1031 exchange mess that happened to us and everything like that, I probably, there's been so many options in my last 12 years of business to curl up in a ball and quit. And there's been a few in that, but I find that what creates success, not just for me, but for anybody, is by not quitting, is by just figuring it out. Like if a problem happens, just, leaning into it further and just leaning into adversity, leaning into things you got to figure out or whatever, and unwinding it, because I find that they always do figure themselves out. They always do work out. And the 1031 exchange thing is working its way out. And I find that to be successful, all you got to do is when things get rough, don't quit, just keep pushing, and they'll eventually work their way out. So even though that emotion to quit can be really, really heavy at times, but to not do it.
It's so true, man. We've got, this kind of question before, and I feel almost silly sometimes saying that, but it took us about 2 years to get our first deal. And then, since that point, we went on a 5-year run, and we've, Gino, we've bought 900 apartments. Right.
Sweet.
And so
that's awesome.
With that being said, I always say, look, the smartest thing that we did is we didn't quit, because we got rejected time after time after time. You guys are idiots. That doesn't work. You can't do that. No. And it was almost like, well, I guess we can't. Right. And then so I ended up buying a house and spent all my seed money. Literally, we got lucky. A few months later, a little crap unit, 25 unit came to us, and we knocked it out.
Mm-hmm.
If we would have not hung in there, though, nothing would have happened. It was taking action and not quitting was the only reason we're sitting here on this podcast with you today.
Right. And you buy buildings where they're a complete mess. And I listened to your Bigger Pockets podcast with you guys, and there was times when you guys were running around going door to door with the tenants and stuff like that and everything when your first couple of deals was really inspiring, because it's not quitting is not just about like when people are telling you no, it's also when you buy a deal and you're like, holy shit, what did I just get myself into? You know?
Dude, these guys were on drugs. They were doing pills. I didn't even, from the Northeast, I didn't even know people were like shooting up pills and shit. I thought they were, like, taking them, but we like found needles, and so we had to start evicting people and stuff. I didn't know about this crap.
Right.
So the opioid thing, like, I found out about that like 5 years ago.
You got to figure it out. You're in, man, you know, and all that. So you got to keep pushing,
it's called a 14-day eviction. That's how we figured that shit out. Beat it. You know?
Right. Yeah,
but to your point, Jake and I guess we committed financial suicide. We blew up our 401ks. I mean, geez, I got $100,000, took a $10,000 penalty, cost segregation, wiped out my Fed taxes. Now people are like, that's financial suicide. Well, the next month I paid that $10,000 penalty off with the cash flow from the property. So you do what you have to do to get into a deal, and you can't always go by what's right or what's wrong. I think 401ks are great for a guy who's doing W-2 and wants to get a matching thing, but that's for the average person. But you know, people who listen to the podcast and people who are doing multifamily are not the average person. So 401ks, I think, are stupid. I think they're useless. I think you got to keep your money until you're 60 years old, and then when you're 70, they tell you have to pull it out, and it's tax deferred, it's not tax free, and blah blah. We can go on, but just to your point, we didn't quit. I mean, that deal was huge for us. We refined the deal. I mean, we pulled $600,000 out of that deal, 5-year interest only. The thing is cash flow like crazy. If I didn't blow up my 401k, I wouldn't be financially free right now. That's what it comes to.
You gotta watch though, and I know you guys were looking to wind this thing up in a second here, but I wanted to comment on that because
we're just getting started, bro.
We're just warming up, right? Let's break the record. Right? I'm having a ball, man. I don't even know where to be. Where do I have to be? I got where to, you know. So anyway, the point I wanted to make there is for hands-on operators, and I look at it two different ways. There is, and I do a lot of syndications. I know you guys are getting into that, but what I found is there are passive investors that think that may think that they should be hands-on and see all the money that's being made, but the smart ones are willing to give the doer, the operator, part of that cash flow in exchange for not having to do anything, right? And the cash flow receiver, the investor over here, call it the cash provider, can have a job, can have a 401k, and not for nothing, they can use that if they have a 401k and then move to another job, that becomes an IRA, and they can turn that into a self-directed IRA, right?
Yes.
I was talking to a guy that has a self-directed IRA custodian company. You know what % of IRAs in the country right now are in self-directeds, invested in things like real estate outside of the stock market? 3%. 3%.
Really?
Right.
Wow.
So what that means is that is an opportunity for us syndicators, for people that are the hands-on doers, to create financial freedom for other people. So we need people with jobs. We can't, not everybody in the world can be an entrepreneur, because there can only be but so many Jakes and Ginos and Matt Faircloths, right? We need people that have jobs to make 401ks or anything like that. But those people can build their financial freedom through working with people like us that are willing to go forth and take action on their behalf, buy apartment buildings, invest in fix and flips, whatever, with their capital, part of which may come from what used to be a 401k. What I think that we need to do is not replace jobs. And again, forgive me if any financial planners are listening to this. What I think that folks like the three of us could be doing is replacing financial planners, because that investing in Wall Street, investing in mutual funds and stuff like that,
go to Vanguard, just do it yourself. You're wasting your time. You know?
Right. No, you really are. Or you could go pick your own stocks. You know, there's enough data out there on which stocks to pick. I mean, you can roll the dice and invest in Bitcoin, whatever you want, but you can also invest in real estate through self-directed IRAs. And I think it's our job to create other alternative investments like that for people. So
I agree.
That's what I think.
You guys were talking about like 401k is great and the W-2 life. I think it's just personal preference, but I hated the W-2 life. Dude, I absolutely hated W-2 life. I hated 401k. I hated that whole corporate grind. But, you know, it's all personal preference, man. Some people enjoy it and it's good for them, but man, I just.
Some people choose that security over it. They want that
versus
security.
What we do though, just drag. Soul-sucking existence, right, Gino? What do you say? The soul-sucking life existence, whatever MJ DeMarco said on the show.
Part of the problem is that, you know, we were taught that, right? You get out of college and that's what everyone does. And, you know, if you want to step off that sidewalk, as he talks about, and get into a fast lane, you're looked at like you're crazy. I mean, I must have told, I don't know how many people I told I pulled out my 401k. They gave me the look like I was I was losing my mind. Like, what are you doing? And I'm like, dude, best thing I ever did in my life, man. Best thing was probably bringing the money there. It's saved. The next best thing was blowing it up and saying, hey, listen, I got an asset that I'm actually, And now that thing is cost saving, and I'm wiping out more at my taxes with that thing. So it's really a crazy phenomenon. Thinking about it, where you're taking an asset, you're not paying taxes because you pulled it out. You're buying an asset, cash flowing on it, and you're actually cost saving that asset and wiping out taxes going forward. I mean, it's just like nirvana.
It's brilliant. It's brilliant. I just would say that it's not for everybody.
No, you're right. I agree. But you know what? It's not for everybody because not everyone can think that way. Problem is there's a lot of experts out there. Once you become an expert, you don't want to try anything new. And like even in the real estate space, where you become an expert at something, you can't do, purchase money orders. You can't do owner financing. You can't do because you can't do it just because you're an expert. You say you can't do it, but you can still do these deals now. Just my personal opinion.
Yeah, no, and I agree with you. And I think that fear is what gets in a lot of people's ways. And they don't realize that just by engaging fear and leaning into it and acting towards fear is the only way you're going to get real change in your life. Is the only way that you're going to create anything. If you just stay comfortable, then things will stay the same. But if you want a bigger life, you have to go pretty much do exactly what you're afraid of doing, and everything like that to create. There had to have been like your asshole must have puckled up a little bit when you took out that 401k, right? That had to have been a little scary.
Those first three deals were the ones that really freaked me.
Well, no, the problem is I tell everybody, if you don't get a queasy feeling in your stomach, Jake and I, we went to do our first syndication about 18 months ago, and it was a $60 million deal. And Jake's like, let's offer in. So I got that queasy feeling in my stomach. And I'm like, when you get that feeling in your stomach, you're doing something right. You're getting uncomfortable. And all of a sudden, what that made us do was we dove into syndication. We got into a mastermind with a bunch of syndicators. We stepped out of our comfort zone. We learned about the whole process. We asked questions. Yeah. We're actually going to have a live event with syndication. So, I mean, it made us step out and say, we're going to do one. We haven't done one yet, but that feeling in your gut is telling you you're doing something right. I mean,
I've learned to live with it. I was speaking at an event. Somebody raised their hand and asked, like, well, when do you stop being afraid of action in this business? Like, when do you stop being, nervous and stuff like that? And I was like, never. You don't. You don't. If you stop being afraid, that means that you're being careless, but you need to have a little bit of concern, a little bit of, not uneasiness all the time, but you just want to get used to it. You learn that to be like a little gut check and everything like that. And the folks that are not taking action because they're afraid are never going to take action unless they just learn to feel the fear and act anyway. And all that. That's the only way you create real change.
We have a property. We're buying a 67 unit deal in Knoxville right now, and we have a property inspection going on this morning, like right now as we speak. And I'm getting messages coming through, and three members of our team.
Take us with you. Come on, let's go check it out.
Well, I'm going after this, but three members of our team just got locked in an apartment. They couldn't get out.
Really?
Coming through on the fucking thing.
How does that happen?
I have no idea. That doesn't even make sense to me. But anyway,
right.
So let's.
That's awesome. This business creates the best stories, and not just my 401k thing. And it sucks. I'll live another day, and my investors will get their capital back, and they'll get covered, and everything like that. And so there's just the best stories that come out of the real estate business, and that people locking themselves in the unit. I had one buddy of mine. I was telling me over a beer that he evicted one of his tenants. He went back the next day to go change the locks. She had broken in the back window and was out front barbecuing when he pulled up, right? Like after she had been evicted, she broke into her own apartment, was running the barbecue when he pulls up to change the locks on her. I mean, just
did she at least give him a burger?
What?
Right. Give him a burger
like, I'll take cheese on that. Right? Yeah.
So we're working our new sponsor today. So let's give another shout out to Property Czar, who is quickly becoming the property management solution for portfolios of all sizes. And right now, our listeners can start a free trial with no credit required. Just go to propertyzar.com/Gino. That's Gino, not the G Daddy. propertyzar.com/Gino. And they're going to get you signed up for free. So
check the show notes, right, Jake?
We're getting there. Next week it'll be a little more fluid. You got to practice this one a few times.
You'll get it.
So I always like asking people what their best habit for success is, because everyone does things a little different. A lot of people talk about their millionaire morning and these different things. My whole thing is that I'm just extremely detailed. I plan out every, hour of my day, and so I don't miss anything. What is yours? What's the habit that makes you mad?
Mine looks almost like yours.
Except that yours is a little cleaner. You're a little neater than me.
Well, you said you plan out every minute of your day. Yeah. I pretty much do the same. I plan out my week. I've run our property management company here in New Jersey, which is where I get all this gray hair from. And because of that, I have to be somewhat fluid, because there's a lot of, in and outs that come in. So it's very hard to plan my day. But what I do is I plan my week. And when I plan my week, I then put my big rocks in each day on like the big things I want to accomplish each day and everything like that. I wish I could. He just said
rocks.
What?
He just said rocks. Gino, what's rocks from?
He's a traction boy, I guess, huh?
You read traction?
No, I'm that's from the 7 Habits too.
Oh, okay. Oh,
yeah, old school personal development. Yeah, right. Yeah, I haven't gotten into traction yet. I'd love to check that. A lot of the KW doing traction, right?
Yeah.
I have to check that out. You're not the only, and a guy like guys in GoBundance are doing that too. But anyway, I put my big rocks in each day. Once I plan my week, I drop in, and I find that allows me to be proactive on things. Because if I don't do that, I just react to the business and I have to allow some time for reaction. Like, you didn't expect your guys to get locked out of that unit or locked into that unit.
No, they're big boys and girls. They can figure it out. I don't care.
Kick the door in. All right. Right. Yeah. I know you know how to pick a lock.
That's it. No, like if you can't figure that out, you're fired. Okay. So
dude, right. Yeah, right. If you're not out of that room in 15 minutes, you're fired.
Yeah. And let's hope they're keeping it PG in there, okay? Like, don't.
Right. That's your job interview. Get out of this room. They should do that. Like, lock a guy in a room and see if he can get out in 15 minutes or less. And if he gets out, he's hired. Right? Like an escape room. Anyway, that's what I do. I'm very planful with regards to my actions for my week, and though that transitions to the goals I want to accomplish for the year. So that's my success tip.
Nice. What about a book recommendation? It doesn't have to be real estate. Gino just read The Go-Giver, and he's jamming out to The Go-Giver every day. So it can be, general business, motivation, real estate, or you can throw a couple at us, or you can say, dude, I don't read. I'm just a man. So however you want to answer.
I read sometimes. Some of the books that I read regularly, there's a book. Okay. I'll read a few. I'll throw out a few. The Science of Getting Rich is a great old school book. It's the book that inspired the movie The Secret. And that's like, law of attraction, manifesting kind of book. So The Science of Getting Rich is a phenomenal book. Another book, you talk about just being a guy and everything like that, is a book that really teaches about being a effective, well put together guy. And it talks about acting into fear as well, which is something that we as men need to learn how to do more, and also dealing with women and everything like that. It's called The Way of the Superior Man. And so I highly recommend that book for any male. And also my wife read it too. So The Way of the Superior Man is another great book. So
cool.
Yeah.
Teaches you how to like grow a beard and chop down trees, right?
Right. It's that superior man, lumberjacks. Yeah. It's how to release your inner lumberjack. You don't have to actually grow a beard, but you can act like you have one, Yeah. How to be a badass, really.
Dude, they need that nowadays. That's for sure. That's what we need.
No, and that's what it is, because our society's becoming more and more demasculated.
That's right.
And it's not that we need to go back to the 1950s or anything like that. We just need the pendulum.
I fit in well in the 1950s, man. I think I'd be good with it. I'd be okay with it.
Yeah?
I think I'd rock that out. I'm just saying.
Listen, I think it's been glorified too much in movies. I think that there are things that were going on back then that we wouldn't have been happy about, But
listen, we are different. That's the whole issue. The whole issue is that men and women are different, and we should embrace our differences, not say that
they are, and we don't
equal, but we are different.
Right. And maybe it's okay that we don't embrace our emotions as the same way that women do and everything like that. But, and also just getting that a man's intention is to fix things. And if you're dealing with your wife and she's just, complaining about a problem, she actually doesn't want it fixed.
That's right.
She doesn't. She actually wants to discuss it and wants to just put it out there and wants to be heard.
And that's the last thing we want to do. Can you please not talk about it? Just stop talking about it.
Right. There is a phenomenal YouTube video called "It Is Not About the Nail." Have you guys heard about this?
No.
Oh my God. You should put it in the show notes. There's a woman, she's got a nail in the middle of her head, like right here in the middle of her head. And she's just complaining to her boyfriend about how she's got this awful pain in her head and all her sweaters are snagged and she can't seem to figure out why she's got this awful headache. And he's like, well, you got a nail right there in your head. And she's like, it's not about the nail. It's not about the nail. Like, I just want you to listen. And he's like, no, we can just take that out right there and you feel better, I swear. But it's like, it's very dumbed down. But I think that it's a struggle that men have is like, no, I got you. I can fix this for you. But they don't want that. Anyway, the way the superior man relates to a lot of that and also just talks about just how to be a strong yet also mature masculine man in the world that we live in. So
two things. One, I think you have a legitimate thing going on here, and this brings up a really kind of point that's happening right now in our society because Gino's brother Marco has been telling me about how his friends are getting beat up by their wives now, and how it's like been like a whole like weird thing where the wives are just like like physically beating on the guy. So we got to be careful there, right? Dudes are taking a back seat. So the spinoff is, we do a relationship show with the three of us, the Jake, Gino, and Matt, Superior Man podcast. But that's in the works. We'll work on that later. So
no problem. We'll talk about swinging the pendulum back to the middle because it's gone way too far. And the reason why that's happening, the getting beat on or whatever, is because it's role reversal and the woman's feeling like she's got to take charge or whatever, or be more in a certain role. Not that's the man's role to. Yeah,
we don't want that. We want everyone just to get along, right? Peace and love.
Right, but because the man just doesn't feel like he can really just be comfortable in his own skin anymore. The women have had to shift more in the other direction as well. I mean, it's trying to
find that
balance. But I think it's incumbent on a lot of guys who are losers out there who are having women have to do that because they're not stepping up for their women or for
amen, brother.
That's the first thing, right? So you guys out there
coming through right
now. So you guys out there who are slacking. I at least have my wife. My wife homeschools. She stays home. I give her that opportunity so she doesn't have to go out and step out and do this. She does what she wants.
Right.
So guys aren't failing on that. And the second thing I learned about you got to all read The Go-Giver. Anyone who's going to work with Jake and Gino is going to read The Go-Giver. It's not about 50-50. So if your wife's having a problem, it's not about 50% her time, 50% your time. I clean the kitchen 50%, you clean the kitchen 50%. It's not about that. It's about doing what has to get done when it has to get done and sharing, right? So if your wife has a problem, it's not hear me for 10 minutes and hear you for 10 minutes. That's not what life is all about. And that's what we're making it all about. We're all making about, well, I watch the kids for 20 minutes, now it's your time. No, that's not what it's all about because that's not what teams are made of. And when you're married to somebody, you have a significant other, or you're in a relationship, that's not what it is. You're basically a team, a cohesive team that has to work together and has to go towards an objective, whether it's raising a family, whether it's buying a house, whatever it is. And it's such a simple, easy book. I mean, Jake could even read. Jake, you could even read the book in like.
Dude, I audibled it like 5 years ago, and I told you about it. Now someone else tells you about it, and you read it. When your boy tells you about it, you don't read it.
But bro, I don't want to get off on a tangent, but you got to read the book. I mean, there's 5 simple, immutable laws that they took from Napoleon Hill, like everybody else does.
Yep.
But it's amazing. It's so, and that there's a guy named Joe in the story, and the same thing with his wife. His wife's having problems. She just wants to be heard, and she doesn't want to go 50-50. And he didn't even solve the problem. She falls asleep, and he tries to talk to her. She wakes up, and she's like, "That's the best thing. You were there for me." And like, wow, guys, that's all we really need to do is just be there for the woman and just listen to her problems and try not to solve them and just be open. And I was like, wow, that is really it's such a simple book, but everyone's got to go out and read that book.
That sounds phenomenal. Yeah, I like that. And too many people, you're right, too many people get caught in the 50-50 thing about saying like, oh, I unloaded the dishwasher yesterday. Well, you know what? Maybe she's got a bunch of other shit going on today and she can't do it. So just do your best and continue to give your best to your wife all the time and acknowledge that you're probably never going to get to 50-50. It's going to just, the pendulum's going to just swing like this, back and forth, back and forth, back and forth. And as long as you're both
going to have your good days, you're going to have your bad days.
Yeah. But if you're an entrepreneur, then there's no such thing as 50-50. Jake and I, we have the company. I'll never say to him, I did this, and he'll never say to me, I did that. I mean, I just got an email from somebody yesterday. I shared the email with you. He's like, he's lucky to have you as a partner, and you're lucky to have him as a partner because we do what has to get done. I mean, that's what any relationship or any
business. It's called MIH, baby.
Right. So, I mean, you just hold each other accountable for that. And that's what I think the relationship should also be: hold each other accountable. And, you're obviously going to have your differences. You're going to have those difficult conversations, but that's what it's all about. So,
well, that you got to have that open communication and being willing to, go into that difficult conversation and say like, hey, listen, and with this with your wife or with a business partner or whatever, to just speak about unhappy things that you're unhappy about, because things when you're unhappy about them start out this big. And then if you don't say anything about them, they get bigger and bigger and bigger and bigger and bigger to the point where the unhappiness becomes bigger than the relationship, and then you're done. But you could squash it when it's small, by bringing it up, and talking it out and having the balls to have that, difficult conversation, even though it's uncomfortable, even though it's talking about maybe vulnerability or whatever it is, to get it out there, because communication is the key to relationships.
Jake, so this has nothing to do with multifamily other than getting a partner, just to put that through. So
no, listen, I got
awesome though.
I'm going to wrap this up right now. And any of you guys out there, if you don't own a chainsaw, go buy a fucking chainsaw, because you need one. You should all own a chainsaw and go cut some trees down.
Every man should own a chainsaw.
Own a damn chainsaw and go cut some trees down, and you're going to feel good. That's it. That's a freaking secret.
That's it.
Me, man.
The way this and grow a beard.
Dude, I'm renting.
Hey, we got one more here. I gotta know, how can listeners get a hold of you? And is there anything you'd like to throw out there and say, hey, we're working on this right now, or you should check this out, or anything like that?
Yeah, well, a few things. I mean, we're always putting together deals that, like the 400 or the 198 unit we did in North Carolina, deals like that produce great returns. So we're there. We've got all kinds of different vehicles for people that we just provide passive investments to people. So people that are looking to just really get involved in the game, but don't have the time to do the day-to-day. We have a lot of different options for people. So that's what I would say that why people should reach out to us. They can get a hold of us if they want to learn more about real estate. We have a YouTube channel that's active. Just look on YouTube at DeRosa Group, DEROSA. They can see mostly me, sometimes my wife, but mostly me doing videos, just teaching or talking about different stuff. Some of the stuff I do for Bigger Pockets is out there too. And that. So, and then stay tuned. We've got some other bigger stuff coming out through Bigger Pockets that'll be out later on this year, that I'm pretty excited about. So stay tuned to what we're up to at DeRosa Group and for my work through Bigger Pockets.
That's great.
Buy a chainsaw.
and buy a chainsaw. You should get a chainsaw company as a sponsor. How awesome would that be?
Dude, we really should, because I love cutting down trees. I love cutting up wood and just making big fires. So, hey, that's just me.
Just fire one up right here on the podcast. They love it. Just let rev it up a little bit.
We don't got time. We got to go. Gino, anything else?
No, just thank Matt for being on the show. He's doing great. Keep syndicating, keep getting out there, keep reaching out to people. Hopefully he can come out to our live event in October in Nashville, the 6th and 7th. Maybe he'll put that on his calendar. A lot of guys out there who are just want to get in the game. They have money. They don't know how to pick the market. We didn't even get into market selection, any of that kind of stuff. But, if you're out there, you can meet a lot of investors out there. So that's it, bro. You
just have me on again, and I'll talk about all this stuff with the next one. And I'll come to your live event, and me and Jake will bring chainsaws, and we'll cut up.
We will
with
party
everybody.
with a chainsaw.
Yeah.
We'll have a physical cutting competition.
Right. Yeah, we'll carve bears.
Yes.
And stuff with chainsaws.
Yes. I'm jacked up right now. Let's do this.
I have to.
All right, guys. That's it. Thank you so much, man.
Bye, guys. Thanks.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.